common stock. So if we decrease retained earnings, which is an equity account, and we increase common stock, which is also an equity account, combines, there's no net change in stockholders' equity. And then letter D, GAAP allows companies to declare only small stock dividends, large stock. Okay. I think I even deleted this question because you guys didn't learn about small or large stock dividends, but this is false. Number 13. Well, let's see. Do we do a stock dividends? We do. We'll do one later. So, number 13. Company has both common stock shareholders and preferred shareholders. The company currently has issued and outstanding 1,000 shares of its 5%, 100 par value preferred stock. So, we've got 1,000 shares issued and outstanding. Therefore, there's no treasury stock. The 5% relates to the dividend of the preferred stock. We've got a $100 par value preferred stock. We declare and pay a $20,000 cash dividend. How much will go to common shareholders and how much will go to preferred shareholders? So preferred shareholders, one of the characteristics of preferred stock is that they get the dividend first. They are preferred. So let's do a little math. We've got 1,000 shares of preferred stock at a par value of 100. Therefore, the total value of our preferred stock is $100,000. And it says we've got a 5% preferred stock. So the preferred shareholders are guaranteed or they get a 5% cash dividend of this value. So $100,000 times 5% equals $5,000. So our preferred shareholders get a dividend of $5,000. Our common shareholders will get the rest. So we declared and paid $20,000 in dividends, $5,000 going to commons, $5,000 going to preferred, the rest $15,000 going to the common stock shareholders. There we go. And finally, number 14. We've got a company that declares and distributes a 10% stock dividend on its common stock shares. Jackroot has 60,000 issued shares before the stock dividend. If you own 5% of the company throughout the declaration, blah, blah. Okay, so we've got a stock dividend. Let's see. We've got 60,000 shares issued and assuming outstanding. And they distribute a 10% stock dividend. So a stock dividend, you can think of it however many shares of stock you have. After the stock dividend, you're going to have 10% more. So, for example, if you had 100 shares, after the stock dividend, you're going to have 10% more, or you're going to have 10 additional shares. Or you can also do it like 100 times 1.1. So you'll get 10 additional shares, or in other words, you're going to be left with 110 shares. You'll start with 100. After the stock dividend, you'll be left with 110 shares. Blah, blah, blah. So, to figure out how many shares are outstanding after the stock dividend, we can just take the total $60,000 shares multiplied by a 10% stock dividend, 1.1, and we'll get 66,000 shares outstanding after the stock dividend. And the question is asking, if you own 5% of the company through the distribution, how many shares will you have after the stock dividend? So if we own 5% of this company, we'll take 5% of 60,000, which is 3,000. So we own 3,000 shares multiplied by the stock dividend, and we're left with 3,300 shares. A.